Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm so excited to welcome you all to yet another promising edition of the Extreme Speed Life. And before we kickstart the session, let's confirm that we are good to go this morning. So I would like to know in the comment section if you can see my screen and you can hear my voice clearly by typing hi in the comment section. So I look forward to seeing some feedback. Please let me know we are good to go this morning. So I would need to know that we are all on the same page here. So if you can see my screen and you can hear my voice clearly, please let me know in the comment section, type in hi, and let's get the session started. Okay, so I think I have a handful of comments here. I can see 60106. Good morning to you. Thank you very much. I can see Mr. Viet Ong. Good morning to you. Thank you. Then we can see 819 Evolve. Good morning to you, Evolve. Thank you very much. 39118. I see your comment. 9163. And of course 5591. All right, so with this one here, I will consider this as a positive confirmation that we are good to go this morning. So once again, I welcome you all to yet another promising edition of the Extreme Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host, where we shall be reviewing the current market structure from a fresh new perspective using simple parameters such as trend lines, key levels, and of course chart patterns to gain valuable insight into the historical price movement of these assets. Now, in preparation for today's trading session, I've already conducted a comprehensive analysis on all of these assets on our watch list for today using simple parameters such as trend lines, key levels, and chart patterns to gain valuable insight into the historical price movement of all of these assets. And the assets we have been monitoring so far this week are the US All Spot, USTech100, popularly known as the NASDAQ, and of course we have the USDJPY and the XAUUSD, which is popularly known as the gold spot. And all of these assets we've been doing pretty well since the beginning of the week, and in fact we have new interesting setups that I'm very eager to share them with you this morning. So I encourage you to stay tuned in so you don't miss out on any of the ideas we will be talking about today. For those who are joining us for the first time, you are highly welcome on board. Glad to have you around. And you might be asking, what is it that we are doing here? Well, as technical traders, we gather here as a community on a daily basis in anticipation of the New York session, where we come to review how well our existing positions are doing. We see how we manage our existing position while we also strategically position ourselves ahead of the New York session. So we do this on a daily basis, 10 a.m. UTC, 11 a.m. West African time. And in fact, I encourage you to be part of our subsequent editions, as the more time you spend with us, the better you get in understanding how this works and eventually be able to use the information you gather in here to make your own independent trading decisions. So once again, you are highly welcome on board. So with that being said, here we will be kickstarting the session, and the first thing we normally do is to check on the economic calendar. And of course, you know how we do it, and we know how important this economic calendar is, as every... Hold on a second, please. Okay, Okay, so like I was saying earlier, we know that these fundamental factors often manifest on the chart in technical patterns and price movement. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable insight into and how we can position ourselves prior, during, and even after this event. So once again, let's dive right in. Now, on the economic calendar today, yesterday, remember, we were looking forward to some very important event yesterday, especially from the U.S. economic docket, and that was the Fed interest rate decision, which came in just as expected, as there was no, the interest rate was left unchanged, and we saw how the market reacted to that event, as we saw the US dollar rise significantly well across board. And the question going into this session is, will this rise continue, or are we likely going to be seeing it as a retracement of the previous impulsive move to incite a movement against the US dollar today? However, today we have another high impact event coming in from the United Kingdom, and that is the Bank of England's interest rate decisions, which will be coming up in about 50 minutes from now, and everyone is anticipating this event. And of course, since we are monitoring the pound sterling, we want to be seeing how the market participant will be anticipating this event, as we want to have structures and patterns we will be using to guide our decisions for today. So with the information we have gathered here, we shall be diving right into the chart to look at things from a technical standpoint. And the first asset we are going to be looking at this morning is going to be the US Oil Spot. And on the US Oil Spot, we've been doing pretty well in the last 48 hours in the market, as we have been selling since Tuesday's trading session. Now, I would like us to run through how the week started for us in this community and what led to the idea of selling these assets. And it's interesting to know that at the beginning of the week, we actually bought this asset before this bearish momentum began. Now, let's run through how the week started for us here in this community. Now, at the beginning of the week, it was quite clear that price action was more of consolidating, confined within that range between the $90.50 level and the $90 area, to emphasize the level of indecision at that particular point in time. And you know how we do it. Whenever we have this kind of range, we want to exercise patience, waiting for a signal to come, either in the form of the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And interestingly, throughout the first day of the week, we saw how price was consistently breaking out of the resistance line of that range at the $90.50 level, which further incited the idea of positioning ourselves for buying opportunities. So we took advantage of buying the US oil spot at the beginning of the week as soon as price broke out of the $90.50 level. And remember, we also capitalized on more opportunities by adding more positions at the breakout of the $90.80 level, the $91.15 area, and of course the $91.50 level before the bearish momentum came in to take us out of that position. And of course, you know that whenever price moves significantly well in this community, we always move our stop losses to secure the current buy position. And if you have done that correctly, you must have a minimum of 150 pips to catch there, as at the first day of the week. Now, interestingly, prior to yesterday's live session, we also had some selling opportunities here, as we saw price break down both the ascending trend line we identified on the higher time frame. We shall be looking at that in a moment, but we had an ascending trend line here. We had the first one here, we had the second one here, and in fact, we saw how price broke down, retested the first one to inside a sell position, and we saw price right all the way to the downside. And during our live session yesterday, we acknowledged that considering that impulsive bearish move, we are likely going to be seeing a downtrend continuation. And for us to be part of that downtrend continuation, we decided to look out for a retracement into that sell window. Remember, we identified the sell window just right between the $91.50 level and the $90.50 area, where we said if we begin to see some signs of sharp rejection of that area, selling pressure showing us signs that buyers are losing that momentum, it will be a beautiful opportunity for us to sell. And look at what happened here yesterday. We saw price retest the structure during the later part of the New York session, and continue selling pressure persist below that area to emphasize that it is time for us to sell. And of course, we sold. And interestingly, one interesting thing about the structure is how price action came back to retest the ascending trend line that was broken to inside that bearish move to the downside. And remember that we also had multiple levels that we said we were going to be using to maximize the potential of the bearish move. So we have levels at the $90 area, as you will see right here. We also had one at the $89.65. We had one at the $89.25, and of course we had a final one right here at the $88.75 area to maximize that move to the downside. So it has been quite a profitable week for us so far on the US All Spot, as if you are taking in that sell position, you will currently be having over 200 pips on that first move, and the second position here is running with about 150 pips move, while the third position is running with about 120 pips, and we have the fourth position running with over 70 pips in profit, and the fourth position running with over 35 pips in profit. So once again, congratulations to everyone who has been part of this profitable journey. Now, for those who still have a sell position running at this point in time, it is advisable that you want to be moving your stop losses accordingly to secure this current sell position, as we might be seeing some bullish momentum come in. And as a result of this, and looking at the way price action is at this point in time, I will be suggesting that anywhere above the $88.80 level and the $89.25 zone seems most appropriate to secure all sell positions there. So move all your stop losses within this range, and remember that we want to be giving enough room for price action to breathe. Now, with a well-secured position at this juncture in the market, what is going to be our next line of action? Are we going to continue selling the US All Spot today, or are there chances that participants in this market will see the US All price as cheap enough to start buying again? Now, for us, before we go into the details of what our expectations will be looking like, I would like to refresh our memories as to what we saw at the beginning of the week. Now, at the beginning of the week, we were analyzing the 4 hours time frame, where we were able to identify the strength of the buyers in this market. And in fact, we were able to connect the series of higher lows, giving us a beautiful ascending trend line, where we said we will be using the trend line to guide our decisions for this week. And you know how we do it with our ascending trend lines here in this community. As long as price remains above the ascending trend line, we feel comfortable buying, while we also look out for more opportunities to buy. However, if price breaks down the trend line, then we want to be getting ready to sell. Now, if you zoom right into the current structure, let's zoom right in so that we can see things clearly. Remember that we had a key level situated at the $90 area. Remember, as we saw price broke down that structure on Wednesday's trading session, that was yesterday morning. We saw price break down the $90 level. We saw price break down the ascending trend line, and all of the signs here are clues indicating that sellers are likely going to be coming in. And one of the decisions we made here yesterday was to wait for a retest of the ascending trend line or the $90 area to capitalize on selling opportunities. So we saw the breakdown of both structure happen, and we anticipated a retest of structure where we identified our sell window to join the downtrend scenario. And you can see what happened. Price moved just as expected, pushing price further to the downside. So now we are at a critical juncture in the market right now, where you will see here that in the last 5 to 6 hours, we've been noticing some buy pressure resume around that $88.50 level, as you will see right here. And if we align this level with what has happened during the second week of this month, you will see that that area has a tendency of giving us buying opportunity. Now let's line up that structure together so that we can use it as a yardstick to guide our independent trading decisions for today. So we have a level situated at the $88.50 area. So you do want to be marking out these levels on your chart right now, as we shall be using it as a yardstick to guide our trading decisions for today. So we have the $88.50 level. So let's mark this one out on our chart right now and look at what has happened around this area in the past. We saw the breakout buy pressure. We saw the breakout retest buy pressure here. And if you fast forward into last week, Friday, we saw another buy pressure resume around this area. Now, price is back into that zone, and in the last 6 hours, we've been noticing our sellers have continued to struggle around this area. Now, the question at this particular point in time is, will price action find a bullish platform here to incite an uptrend continuation, or is it likely that we see price break down the structure to incite a sell-off in this market? Now, you will agree with me that we are at a crucial juncture in this market. So at this point, we shall be scaling down into the 1 hour time frame to see how participants in the market has been reacting to this $88.50 level. Do we have any patterns or structures that we will be using to guide our next move? Now, scaling down into the 1 hour time frame, this is where we are right now, just right around that $88.50 level. And in fact, I would like to see price continue to the downside for me to join a bearish move. And as a result of this, let's look at the $81.10 level as an area to capitalize on the downtrend continuation. So I'll be giving this a purple color to differentiate it from the previous lines. So we have the $88.10 level. Let's mark that out. All right, purple color too. Beautiful. So at this point in time, you could sell below the $88.50 level and then had more positions at the breakdown of the $88.10 area. Now, there are two ways to which we can capitalize on this move. And for those who have been with us in this community for a while now, you know how we do it. For those who have been profitable so far this week, since you are very profitable, we can afford to leverage on some of the profit we had made so far this week to test waters below the structure to capitalize on downtrend. So we can afford to place a sell stop order below the $88.10 area to capitalize the next move, and of course below the $88.50 level. And of course, if this does not work out, we know quite fine that we are only leveraging on the profit we have made so far this week. However, if you are new with us here in this community, then you are coming in from a clean slate, then you want to be patient for confirmations to happen before you jump into a position. And one of the things you want to be looking out for here is price breaking down the $88.10 area, retest of structure. So as soon as we notice the breakdown of the structure, we scale down into our lower time frame where we want to look out for signs that buyers are finding it difficult to climb back above the $88.50 level. And if this happens, it would reflect on the chart as continued selling pressure, after which we want to be joining a sell below the $88.10 level. So this is how we are going to be capitalizing on a bearish momentum to the downside. However, if the contrary happens here, how do we intend to capitalize on that? You know how we do it in this community. In as much as we're looking out for selling opportunities here, we cannot ignore the potentials of buyers. And in fact, since the last couple of months, you notice that price has been consistent, been finding higher highs as price action went on to hit the highest point this year at the $92.50 zone. Now, what is it that we are going to see on this chart that will make us change our bias from bearish to bullish? Well, personally, if we look at the structure closely and considering the continued buy pressure around this area in the last 4 to 5 hours now, we might likely be seeing a move that will take out all these buy positions here. Now, for me to capitalize on this opportunity, there's a trend line here which I would like us to identify, which let me do that quickly. So we have a trend line. Hold on a second. So let's thicken this a little bit, as this is going to be one of the yardstick we're going to be using. So let's make it red color. All right, so let's bring back our candle chart and readjust this to suit the pivot highs in this market. So you can see how this trend line has been affecting price action since yesterday. As you saw here, rejection, then we saw the breakout, price came back down, breakdown below that structure, and since the breakdown happened during the later part of the New York session yesterday, price had continued to remain below that trend line. So this trend line here is going to be a major factor in determining where price is going to be going for today's trading session. So if price remains below that descending trend line, we shall feel comfortable in our sell position and of course look out for more opportunities to sell. But if at any point in time price action takes out that trend line, then we want to be seeing this as a signal that we might likely be seeing an uptrend move. But remember that we are not going to be getting too excited at the breakout of that structure, neither are we going to be having a buy stop order yet, as we will need some confirmation to happen before we jump into that position. And in fact, the breakout of that trend line could turn out to be a false breakdown that could incite some sell-off going forward. So what we are going to be doing here is that as soon as price breaks out of that trend line, we shall scale down into our lower time frame to look out for signs like a retest of structure. It could be the retest of the trend line or the $88.50 level, where the appearance of buy pressure comes in, and this would be a beautiful sign that sellers are finding it difficult to drop below the trend line and the $88.50 area, giving us a beautiful opportunity to join the uptrend move. Now remember that we have multiple levels here that we can use to capitalize on this uptrend continuation. We have the $88.75, we have the $89.25 area, and of course we have the $89.65 level and the $90 area, which happens to be our key level for this week, as levels that will look out for more opportunities to buy if price action eventually breaks out and retests these structures. So this is how we are going to be managing our trades on the USOILSPOT today, and you can see how important both the descending trend line here and the $88.50 level is going to play a major role in determining what our next line of action will be. So you do want to be marking out these levels on your chart, most importantly the trend line and the $88.50 level. Let's see how the market will react to the structure in the next couple of hours to give an insight of what our next line of action will be. So I wish you best of luck on this one. Let's see how the market plays out. Mark out your levels and let's ensure that our structures mature before we jump into any positions. So if you have any questions whatsoever as regards to the current setup or as regards to my explanation, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever, while you can also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. All right, in the absence of no questions, I want to assume that we are all on the same page. So let's hope that price move, whatever direction price moves, we are ready to capitalize on that move. For those who still have a sell position, let's ensure we secure all sell positions by moving our stop losses accordingly. So moving on. So the next asset on our watch list for today is the USTech100, popularly known as the NASDAQ. Now hold on a second, please give me a moment. Okay, now, so on the Nasdaq, we have been doing pretty well in the last 24 hours as we saw two sell positions triggered along the line as we rode that move all the way to the downside. Now, let's run through how the week started for us here in this community and what we saw in this market that led to the decisions we made so far this week. Now, first of all, the week started with a consolidation phase as we saw price confined within the 15,233 and the 15,195 area. In fact, the range was so small as we saw price range within that level. And of course, you know how we do it. We wait for price action to either break out or break down of that structure to give us an opportunity to either buy or sell. Now, this range here expanded in the last 2-3 days, as you saw. Price expanded further into the 15,270 and the 15,150. Though we had a sell position on Tuesday right here after price broke down that ascending trend line, and during our live session yesterday, we acknowledged a level, this purple line right here, where we said if price remains above that structure, we shall be buying at that point in time. Of course, we had an opportunity to buy as we saw the breakout, retest of structure, and price moved about how many pips was that? It moved about 30 pips, and I do hope you moved your stop losses accordingly. If you have done that, you must have been taken out of that position had a worst case scenario. And remember, we made mention here that if price does not go the bullish way, then a breakdown retest of both the trend line here and the 15,195 will be welcoming selling opportunity, and that was exactly what happened prior to the Fed interest rate decision yesterday. And capitalizing on this bearish momentum, we rode that move all the way to the downside. And remember that we also had another level at the 15,150 where we said we shall be adding more sell position to our existing trade if price breaks down that structure. So with the total of two positions right here, how many pips have we scooped so far at this particular point in time? So from the first position, we have over 340 pips in profit, while on the second position, we have over 280 pips in profit. So a total of about close to 600 plus is in kitty right now. Congratulations to everyone who has been part of this profitable journey. And as usual, you know how we do it. The next thing we want to be doing right now is to ensure that we secure these positions by moving our stop losses accordingly. And from a technical standpoint, I will be suggesting that anywhere around the 14,950 and the 14,920 seems most appropriate to secure this current sell position, as we know we want to be given enough room for price action to breathe. Now, with a well secured position at this juncture, what is going to be our next line of action? Are we going to continue selling the USTech 100, or will it be cheap enough to buy right now? So before we go into the details here, we will need to see how the price action is looking like on the higher time frame. Now, to do that, we want to be scaling up into the higher time frame, and in fact, I would like to run through the daily time frame. Now, on the daily time frame, if you recall vividly, we acknowledge that price action has been very, very bullish since the beginning of the year, and in fact, we have an ascending trend line to buttress how strong the buyers are. Now, besides the ascending trend line, we also added a key level to our current market structure, as we said here that this level will be a major determinant of how price action will be playing out this week. And you know how we use our key levels in this community. When price breaks down the key level, then it will be a beautiful opportunity to sell. And one interesting thing about this key level is the fact that it also shared a confluence with an ascending trend line. So at the beginning of the week, we were looking forward to either price will respect that ascending trend line one more time to push price to the upside, or we might likely be seeing a breakdown of both the ascending trend line and the key level to incite a selling opportunity, which of course is what happened right now, and we can see how selling pressure continue to emerge in this market. Now, with the breakdown of the structure right now, what is going to be our next line of action? In fact, the next question we want to be asking now is how far will this bearish momentum go before we have a retest of structure? Of course, we know that from a technical standpoint, when price breaks down a key structure such as the 15,150 and the ascending trend line in this case scenario, we expect that some point in time price will come back to retest the structure, where continued selling pressure will incite more selling opportunities. Now, with this scenario we have here, how far will this bearish momentum go before we begin to see some buy pressure that will retrace back into structure, probably to incite another wave to the downside? Now, if we go to as far back as let's see right here, as far back as the month of June, you will see that we have a level that we can use to guide our trading decisions for today, and that falls exactly at the 14,790 level, as you will see right here. So we want to be marking out that level, 14,790 level, as you will see right here. So whatever happens around this area is going to be deciding what our next line of action will be. Now, if we go to the month of June, you will see how this level have played a major role in determining buy pressure. You can see every time price comes into this area, we saw how sellers struggled, giving way for buyers to push price to the upside. Fast forward into the month of August, we saw the same thing happen here. August all happened, and right now price is gradually approaching that structure again. Now, we want to remain patient here. We want to see how the market will be reacting to that level to determine what our next line of action will be. Now, if we are going to be doing this, one thing for sure we will be acknowledging here is how this area had been an accumulation zone. So I will consider this to be a demand zone at this point in time, judging from the way price action has been reacting to this zone. So let's mark out these levels on this zone on our chart. So we have it at the 14,650. I'm just approximating it to a psychological number. So we have something like this. I always like this to be right inside that box. And if we do that correctly, we should be having something like this. So now you can see how this level had played a major role in pushing price to the upside. So we want to remain patient. Let's see how far this bearish momentum will go. And in fact, if price comes into the 14,790 and we begin to see buy pressure resume around this area, then we would want to be part of an uptrend scenario. And remember that when price does this, we want to be on standby to move our stop losses accordingly to secure our positions, as price could come into this area and sell pressure resume to push price to the downside. So let's see if we are going to be seeing buy pressure around or above the 14,790 to join that uptrend move. However, if instead price drops significantly down below the 14,790, a retest of the structure will be a beautiful opportunity to add more sell positions to our existing trade. Or if you don't have a position running, this could be an opportunity to join a fresh new sell positions. So let's see how the market will play out going forward at this point. So we shall be exercising patience. Let's allow this bearish momentum to run. And if price gets into the 14,790, we hold on to see how the market will be reacting to that zone. So these are my views here on the USTech100 for today. If you have any questions, feel free to let me know in the comment section. And for those who have a sell position running at this point in time, I've told us all to ensure that we secure this current sell positions while we wait out to see how the market will be reacting to the 14,790. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever, while you can also use that time to mark out these levels on your chart. All right. So in the absence of no questions, I want to assume that we are all on the same page here. So we shall be moving right into the next financial asset on our watch list. So the next asset on our watch list for today is my favorite, and that is the XAUUSD. And in fact, since the beginning of this week, we have been doing pretty well on this market. As you can see, we were buying the XAUUSD at the beginning of the week. Now, before we go into the details here, I would like us to run through what this market was really doing at the beginning of the week and what led to the decisions we made. Now, at the beginning of the week, price was confined within a range that was between the $1,930.50 level and the $1,922.50 area. And of course, you know how we do it in this community. When we have this kind of uncertainty in the market, we wait patiently for either the breakout of the resistance line of that range to give us opportunity to buy, or the breakdown of the support line of that range to give us an opportunity to sell. However, besides this range here was this ascending trend line, which we highlighted at the beginning of the week, and we considered this to be a major parameter in deciding where our next line of action will be. And as price continued to find buy pressure around that ascending trend line, which also lines up with our week's key level at the 1,925 area, we decided to join a bullish move at the breakout of the $1,927.50 level. And we saw what happened here. Price broke out, and in fact we had the privilege of adding more positions at the breakout of the $1,930.50 level, and of course the 1,934 area before that bearish momentum began. So as at the beginning of the week, we were able to scoop over 100 pips on this one before the bearish momentum came in this market. So as at the first couple of days of this week, we were already profitable in this market. And right here on Tuesday, as soon as price broke down that ascending trend line here, we decided to sell below that structure, which of course didn't last long, and I told us all to move our stop losses accordingly to secure the positions while we wait to see how the market will react to that zone. And to further make things a little bit much more easier for us yesterday, we acknowledged this descending trend line after connecting the series of lower highs. And one of the things we said here yesterday is if price breaks out of this trend line, we shall be looking out for buying opportunities. So we marked a level at the $1,930.50 area where we capitalized on this buy opportunity, and in fact we rode that move all the way to the upside, milking every pips here by adding more positions at the breakout of the 1,934, 1,937 and the 1,944 area to maximize the potential of this bullish move, hereby giving us over a 400 pips in profit on the XAUUSD. And immediately after the Fed's interest rate decision yesterday, we saw how the gold crashed below the 1,944 to bring price back into a crucial juncture in this market right now. For those who took advantage of the buy positions, well done to you. And for those who took advantage of that sell positions, well done to you for being on standby to capitalize on that move. Well, personally for me, I missed out on that sell position as I wanted the market to normalize, allow market participants to digest the economic implications of the unchanged interest rate before making a new decision. And since yesterday's crash, we can see price has been doing some consolidation phase around the 1,925 area, which happens to be our key level for the week, and the $1,930.50 level. Now let's look at the structure closely to see how we can capitalize on any potential move. And for us to have a better understanding into the psychology of participants in this market, we will take into consideration this descending trend line we marked here a couple of days ago. Now remember, we saw the breakout of the descending trend line here yesterday, as you will see right here, and we all know that from a technical standpoint, when price action breaks out of a key structure such as the situation here, we expect that at some point in time price will come back, retest the structure, and the appearance of buy pressure is likely going to be inciting an uptrend continuation. Now, if you look at the structure closely, as soon as price got back into that trend line, we saw the resumption, the reemergence of buy pressure, as you will see right here. And one interesting thing about the resumption of buy pressure here is the fact that it came in just exactly around that week's key level at the 1,925. And you know how we use our key levels in this community. When price remains above that structure, we want to be looking out for buying opportunity above that area. And the only condition that will make us want to be selling here is for price to find seller setup below that key level. Now, with the way things are going right now, it appears price is doing a retest of this descending trend line. So we saw the first one here during the early hours of today, and in the last couple of hours, price is back into that structure to retest it again. Now, the question at this point in time is, will this trend line serve as a platform to incite new buying opportunities in this market? And if it's going to be, what is it that we are going to be seeing here that will make us want to join that bullish move? Well, if this trend line continues to resist selling pressure and the key level continues to hold the platform for buying opportunity, then I would like to see something like, considering the impulsive move down into the structure, hold on a second. We saw the scenario here. We saw price come back into the structure. I would like to see something like a higher highs and higher lows around this area. Something like this, a higher high, higher low, higher high, higher low. Then I want to be part of the uptrend scenario. So in that regard, I will be positioning myself anywhere above the $1,927.50 level, where we shall be having enough room for our stop loss to breathe, so we can have a stop loss of between 30 to 40 pips depending on your portfolio size. And let's see how far will this reversal pattern go. And in fact, remember we have multiple entries, which we of course used to maximize the bullish momentum yesterday, and we shall try to replicate the same scenario if price continues to break out of the structures. And the structures are the $1,930.50 level, the $1,934. We also have the $1,937 right here, and we have a final one here at the $1,944. So if price action will continue to the upside, breaking out of this key level like a breakout retest of structure, then we want to be part of that uptrend continuation. So that is how we are going to be managing a buy position on the XAUUSD for today. So let's see if the market will break out of the $1,927.50 level, and if this happens, we want to be part of that move. However, if the contrary happens here and instead price action continues to find lower lows and lower highs, we do want to be part of that move too as well. Now, if you look at the structure here, the lowest point price action has been for this week is the $1,922.50 level. And interestingly, that level also lines up with this descending trend line we have here. So for me to sell at this juncture, I would like to see price break down, retest the $1,922.50 level, and I begin to see signs that buyers are finding it difficult to climb back above that area to join a trend continuation to the downside. So the $1,922.50 level is going to be playing a major role in determining if we are going to be selling for today. So let's mark out that level on our chart, and let's see if the market will break down that structure to inside selling opportunities. But if the buy pressure continues above the $1,922.50 level, then we shall be looking forward to a breakout of the $1,927.50 to capitalize on an uptrend move. So these are my views here on the XAUUSD for today. If you have any questions, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever, after which, if there are none, we move on to the next financial asset. And you can as well use that time to mark out those levels on your charts, as you will be needing them as a reference point to guide your independent trading decisions. All right, so in the absence of no questions, I want to assume that we're all on the same page, so we shall be moving right in to the next financial asset on our watch list. So the next asset on our watch list for today is the USDJPY, and in fact we have a very choppy scenario going on in this market right now, and in fact I'm not surprised at all with the way things are going at this point in time. Now remember vividly that we talked about the sensitivity of this area, and I made mention of how this area is no ordinary zone, as this is the territory where the Bank of Japan made a significant intervention during the same time last year. And the looming fear of another intervention has cast a shadow of indecision over the past month. This uncertainty is reflected on the chart, manifesting as a consolidation phase, retrenchment phase, choppy scenario amidst a resilient U.S. economy. Now, here is where things get intriguing at this point in time. Recent developments emanating from the Bank of Japan have tilted the scales in favor of the US dollar, and from a technical standpoint, we find ourselves in a scenario where sellers seems to be gradually losing momentum. However, remember that tomorrow is the Bank of Japan's interest rate decisions, which of course could cast some level of uncertainty in the market, as majority will want to see what the Bank of Japan will be doing tomorrow to decide what their next line of action will be. And of course, as technical traders here, we would want to remain very patient to see how the market will be playing out around this area. But before we go into the details here, I would like to show you what we saw here on this chart from a technical standpoint on the higher time frame. Remember that we saw a uptrend continuation pattern in the form of a ascending triangle. So we saw this impulsive move, all the way up into the structure. Then we saw this horizontal resistance line along the 147.950, which happens to be the highest point price action has been this year, of course. Then we have the higher lows here, giving us an ascending trend line, which has been supporting that bullish momentum since the beginning of this month. Now, with this scenario here, we have an ascending triangle where the resistance line of that ascending triangle is needed to be broken for us to confirm the uptrend continuation. And in fact, we finally saw the breakout of that structure yesterday, and we expect a retest of structure to give us an opportunity to join an uptrend continuation. But in the last 2 hours now, we have been noticing some selling pressure, which in fact has led to another breakdown of this ascending trend line. Now, with the way things are going right now, it appears that sellers are beginning to or gradually gaining momentum right here. Hence, we need to be very, very careful. And for the fact that price action still remains below that our key level for the week, which is situated at 147.950, we might likely be seeing a sell-off. So it now depends on how price action or how market participants react to this key level here that will determine if we are going to be selling or not. Now, if the sell pressure continues below the key level and we see something like this breakdown, we already have the breakdown of the ascending trend line and price appear to be breaking down that key level right now. If continuous selling pressure happens to appear here on our lower time frame, then we will have no other choice than to join a downtrend scenario where we can place our stop loss, take profit target, at a maximum 145.00 area, while we continue to move our stop losses to guide and protect our positions as price moves in our favor. And the only thing that will make me want to be buying here is to position ourselves above the 148.00 area, which lines up with that ascending trend line, as a resumption of buy pressure above the ascending trend line will be a beautiful opportunity to join an uptrend continuation. So this is my view on the USDJPY for today, and in fact I would like us to run through what the price action is looking like around that key level at the 147.950 on a much more lower time frame like the 1 hour time frame. Now let's scale back down into the 1 hour time frame where things will now become a little bit much more clearer. Now, as you will see right now, price has broken down this trend line. So let's see if this is going to hold, that is selling pressure will hold below this trend line and the 147.950. So like I said earlier, if you are taking advantage of this opportunity right here, well done to you for being on standby. I did a session earlier where I advised that we sell below the 148.160, which I already have a position triggered there. And if you are taking advantage of that move at that point, you do want to be moving your stop loss, secure this current sell position while we wait and see if the market will do a retest to incite a sell-off. So for those who had missed out on the sell-off here, let's hold on to see if the market will do any form of retest of either the 147.950 or the 148.160, which shares a confluence with an ascending trend line to incite a downtrend movement. And in fact, we have multiple levels like the 147.720, the 147.600 to add more position if price continues to drop further to the downside. So this is how we are going to be holding on for any bearish opportunity in this market. So anywhere below both the ascending trend line and the 147.950 seems most appropriate to join selling opportunities. However, if price continues to climb up to the upside, then I would rather want to see a takeout of the 148.400, 148.160, 148.400 area, something like this, breakout back above that ascending trend line. And if continued buy pressure happens, we join, then have another buy stop order above the 148.400 to maximize the potential of that bullish move. So this is how we are going to be managing our positions for today on this one. But the way things are going right now, it appears that sellers will be dictating the pace today. So let's be on standby to capitalize on this move. So these are my views here on the USDJPY for today. If you have any questions whatsoever, feel free to let me know in the comment section, as I will be willing to be of help in that regard. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever, while you also use that time to mark out these levels on your chart as we continue to monitor price action. All right. So in the absence of no questions, I want to assume that we are all on the same page. I see your comments, Esme Jr. I see your comment 8248. Good morning to you. Glad to have you around. Dino, thank you very much. 619 and 8012. I see your comment too as well. And 5591. All of you are very, very wonderful. So at this point in time, it has been quite an interesting day so far, as we were able to attend to four major assets, which includes the USOILSPOT, the USTech100, popularly known as the Nasdaq. We also attended to the XAUUSD, popularly known as the gold spot, and of course the USDJPY, all of which we were able to use simple parameters such as trend lines and key levels, and of course chart patterns to gain insight into the market, and using that information to position ourselves ahead of today's trading session. So I'm very confident that we are well equipped as we simulated all the potential opportunities that could happen around the current structures we have on the chart. So I encourage us all to allow our setups to mature before we jump into any positions. For those who joined us for the first time today, I do hope you are able to gain one or two things from what we discussed here today. And in fact, I encourage you to be part of our subsequent editions, as the more time you spend with us here, the better you get to understand how things work and eventually be able to use this information to make your own independent trading decisions. So I look forward to seeing you all same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing, and at the same time get ourselves prepared for the last trading day of the week. Do have a wonderful evening, everyone. Bye-bye.